Hello there, this is going to be a video speaking about hedge funds, institutions and the tactics that they use, because it's looking more and more likely that institutions, hedge funds, whatever you want to call them, are trapped. Now, there are a few things which lead me to believe this. Of course, the price action is inevitably going to be one of them. The price action that we're seeing right now is very dodgy. It's been coming down over the past 6 months, which is fine. You know, the markets aren't doing too well. But when we're in a position now where the majority of retail appear to be holding over time, if not adding more, one does have to question why we are at the point that we are at. Anyway, that's just one of many points I want to cover in the video. It's going to be relatively in-depth, but I'm going to try to keep it short and concise at the same time. So if you do enjoy this video, of course, do share it, leave a like and subscribe. Again, the more people that see this, the better in my opinion. Yeah, because we're trying to get that good news out there. Anyway, again, this is not financial advice, just take it as my personal opinion, nothing more. But with that being said, we're going to jump straight in. So what I want to come on to do is look at what the hedge funds are doing. Now, the first one is coming from over here, speaking about a year after GameStop, Wall Street is still scared of the power of retail traders and it's tracking them closely. It's coming from Markets Insider. Absolutely true, could not agree with this more. Yes, they are still tracking us, and I do believe they are still scared of us. And who's to say that this is over, right? You know, they always go on about this is over. Just because the losses may not be realised yet, it doesn't mean that they are not coming, right? It's one thing that we have to think about. Now, of course, that is entirely speculative, who knows, but it's just one thing to think about in my opinion. Anyway, getting back to the actual point, I do believe it is very true that retail traders are being monitored, and this is made apparent by this, and I've talked about this a few times, but it is very crucial, and I must reiterate it. It shows that about 85% of hedge funds and 42% of asset managers are monitoring retail. Now, I've spoken about this one in detail, so I don't want to go over it too much, but it does tie back into the entire point that I'm trying to make. They are watching us. And the reason, well, the question is why? What is the reason? Why do they need to watch us if we are losing this one? And again, this is something that they have been doing for a long time, and I spoke about this in a recent video when we were talking about bears and people who are negative on AMC. Are they coming from there? It isn't impossible, so I think that is one thing to think about in the entire movement. But really, it's about the whole background story of what's going on right now. Now, this one is from the Financial Times. I've discussed this one in detail before as well, but it is important. It's speaking about the way, in my opinion, that the US markets are built. So it speaks about the fact that hedge funds are opposing the SEC's reform plans, and again, I don't want to go over it too much because we have covered it in detail. I'm sure people are bored of it now, but it is one of these pieces that is worth getting out there. So it speaks about the fact that they sustained those big losses back in 2021 due to meme stocks, as we know. Certain companies have gone out of business, etc., etc. But really, the main point is Gary Gensler back in November saying that he wants to bring securities lending out of the dark. And if we have a look at what they are saying, the hedge funds, it's a long story of basically speaking about the fact that if this does happen, it could put them in a situation where things like GameStop can happen again. So let's talk about this one in the exact words that it was listed. I'm just trying to find it out for you guys right now. And we can see, yeah, the MFA was strongly concerned that the other participants in the market would be able to reconstruct or reverse engineer a hedge fund's trading strategy if the SEC insisted on detailed securities lending. Now, let's think about this one, right? Just break this one down for a minute and imagine if a retail trader was saying this to another retail trader. Imagine if I said to you right now, my trading strategy doesn't work because I have to appropriately list my data. It just doesn't sound right, does it? So, of course, this is just one individual. It's important to note that. But what I am getting from this one, again, make your own conclusions, come to your own ideas. But what I'm saying here, what I'm seeing here is this speak about if the market was allowed to be lit, then basically these plans could be reconstructed or reverse engineered, not over the market, but over a fund's particular strategy if the SEC insisted on detailed reporting. Now, again, going back to the whole retail analogy, if we were to do this, this would be considered bad investing on our part. If they can't trade properly without, you know, this opaque nature of what they are doing, what does that say about them, and what does it say about the financial industry as a whole, with these big banks, hedge funds, etc., doing this over years and years? And now if it was to come into the light, as Gary said, it would be a negative for them and it could allow their strategies to be reversed. Doesn't that say more about them than it says about us? It says more about the markets than it says about us. It says that they are not used to playing by the rules, and that is what I have personally taken away from it. Again, you may disagree. Now, I'm going to get onto this one over here in just a second, but this is another good one. It's coming from R Matchin on Twitter. It says, maybe if the government do not bail out the criminals involved and enforce new rules, T+1 is appropriate, plus add new fines to these crooks, return all the profits they stole plus 20% penalties, then maybe I will reinvest again. It's talking about what we're seeing, of course, in the past financial crash, but also across the markets all the time, right? We're hearing about this fund, that fund being fined for breaking this rule, breaking that rule. And again, going back to the hedge funds trading strategy, this is not a problem for them. Simple reason why this isn't a big problem for them. If they have to pay back a small amount, 10, 15, 20, 30%, whatever, 50 even, maybe even 70% back, and of course that is over-exaggerating to make a point, if they have to pay that back, it's just like taxes, right? They can incorporate this into their strategy, break the law, break the rules, get away with it, pay the fine, make profit, and move on. That alone doesn't seem right. Now, I've had people in a former video I made earlier on today saying that these people should go to jail. Again, you're entitled to your own opinions. I think, on the one hand, jail would stop them, but generally speaking, I am not the biggest fan of jail unless somebody has done an awful crime. However, this is pretty bad. But I do think at the minimum, at the absolute minimum, they should have all of their profits taken away from them, and then they should have to pay probably at least 50 to 100% back on top of that, so that they have actual incentive to not break the rules. Again, jail would work as an incentive as well, but oftentimes in the system anyway, we know rich people sometimes do get away with it. So that's one thing to think about. But yeah, if they were to at least fine them appropriately, that would at least have some sort of an impact, because right now, like I said, you can incorporate this into your strategy. If you're a hedge fund, use it as something like taxes, and you will not feel it at all. That's the way that I have seen it. Now, going back onto this is coming from Cat Striker, a prominent figure in the AMC community on Twitter. She's posted this, she's reposted this from YouTube, and you can have a look at it if you want. Just type in her name and this will come up fairly easily. It's speaking about Russell Brand and insider trading. The penalty for not reporting their purchase could be as low as $200. Now, going back to that point that I literally just made, if I, or well, not me because I personally wouldn't do it, but if a corrupt hedge fund made $10 million, okay, and they had to pay $200, there's no incentive there at all to follow the rules. You know, it doesn't make sense. So, that's why I think, right now, we need to shine more light on this. We need to highlight where the hedge funds are flawed, because they certainly are flawed. They don't follow the same rules as everybody else. And we can see, as we looked at in that post from the Financial Times, if they had to follow the same rules as everybody else, some may argue they would have a lot of difficulty, having the capabilities to do that. And that is why we have to, kind of think about these things. So it just shows not only are they following the rules appropriately and, doing all that, they are actually breaking the rules. It's been made very clear right now. And obviously, on top of that, if they were to follow the rules, it looks like they would have difficulty remaining in the positions of power that they are already in. So that's one thing to think about. Of course, this is all just opinion related. It's important to note that. And we're not saying any particular institution does or does not do something, but what we have here is a few pieces of clear data from, a lot of different sources, which all point back to the same things, right? Of course, I'm sure you know what that thing is. I'm not going to go into too much more detail about it because I've spoken enough for this video, but I think it was detailed. I hope it was useful. Again, do share it, get it out there if you can, please, and I'll be back to see you guys in just a bit for another one. So see you then. Goodbye. So thank you for watching through till the end, but let me tell you about our Discord. So on your screen you will be seeing the N2S Finance Discord. Obviously it is split into multiple sections. Basically at the top we have updates from me and all that kind of good stuff. If you scroll down a bit further we have the main sections where we focus on cryptos, SPACs and other hot stocks including penny stocks, even stable growth stocks as well, and we even have a special AMC GME chat. If you scroll down you can see some research and DD from the community. We also have funny memes and you can see actual contributions from members down here. And again, if you do join us, it is completely free, link is down below. But if you do want to become a Patreon, you will actually get a pink sticker which will be displayed on your name. So your name will come up in pink as mine comes up in red down here, and that will show that you are a Patreon. But other than that guys, you can join completely for free down below. You do not have to pay anything if you do not want to. Thank you for watching, see you soon.